Let me call to order the regularly scheduled meeting of the Board of Finance, December 15th, and we'll begin with the Pledge of Allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation under God, indivisible, with liberty and justice for all. Okay. Our primary agenda item today is a report from Chris and Tyler, formerly of FIA, still FIA, but now known as DeMayo, Schneider and Associates. We appreciate that. Before we do that, though, I just wanted to I just had a couple comments on our tri-board meeting. I think it was a good meeting. I think we got a lot of the information we wanted to share. I think it's obvious that this is a very challenging year for everyone. And I respect the dialogue that we had. I would just encourage that through all of this, we all remain as civil as we can and recognize that everybody has really important roles to do as volunteers like we do or as employees for the town. And we certainly can disagree and make our points. We have an extra onus as the financial cops to be diligent in our efforts to represent the taxpayers. But in doing so, we really need to continue to work on in a good collegial way. And I think we will going forward. But it's obvious that we're coming at a tough budget year in a tough environment. So there'll be more of that to come as we go. So with that said, I would turn it over to Chris, and we appreciate
Rob, let me just ask. Thanks. I agree with that. Was that cautionary looking forward, or do you think we broke some glass at the last meeting that we got to be worried about?
I'm not. This was not designed to slap anybody's wrist or anything. I just think that certainly things flashed a little bit on that meeting, which shows that there's some feelings about this. But our job is to really be diligent about, and I think you said it very well for our board, Art, that we need to be very diligent about how unusual a year this is and how some of the very important big things we have to do. And I think we tried to do that on a fact basis way, but emotions boiled right to the top. So no, this is not cautionary. I think we need to, our role is to be tough love sometimes, and that doesn't feel very good. But we're going to have to continue in that role going forward.
Okay.
Yeah.
Thanks.
All right. Thanks. All right, Chris. You're
great.
The man.
Well, hi, folks. Great to see everyone and trust everyone's well. I know, I think the intention and directive from Amy was to kind of hit the high points. And I know this is a replay for a number of folks on the call who heard it not too long ago at the subcommittee meeting. So I think Tyler and I's intention is to cut to the chase here and just at the highlights and kind of share with you a little bit of high level perspective. Bear with me here. Let's see. Everyone sees the screen. I trust.
Yes, yep. We do.
Yep.
All right. So we'll
perfect.
101 pages, and we promise we won't use anywhere near all of them. So let's grind away here, and we'll give you a little bit of color and perspective on the markets, and then dive into the retirement plans and get you caught up there as well. Well, I think we can really stay on and center on this page in terms of a quick descriptor for what's going on in the capital markets. I think, as everyone knows, the environment has continued to largely be a constructive one for capital markets and for risk taking since the height of the crisis back, call it, or onset of the crisis, I should say, back at the end of March. And here, as evidenced by third quarter equity returns globally, you see some fits and starts, which is kind of the pattern we've seen since March, but fits and starts and nonetheless a move higher in equity prices as a proxy for that risk sentiment I just mentioned. Very noted here over the summer in July and August. And then we did have a bit of a pullback in September with some concerns centering around the technology sector. As you've all read, those glamour tech names had led the indices higher in a pretty pronounced way. What's encouraging to us and not shown on the page here, and we talked a little bit about this with the subcommittee a week or two back, the breadth in terms of what's working in the capital markets today is much broader than what we had for the first 6 or so months post-crisis. So a rotation away from some of those large cap growth names into small cap equities in the US, into international equities, into the value style versus the growth style. So this broadening in the markets is encouraging to us and comforting and kind of reassuring, right? When you're operating with kind of a globally oriented and diversified footprint, the way your retirement plans are, right? Those are, I think, important tailwinds and ones that we think can be sustained into 2021 and maybe foreshadow the initiation of a new economic regime, right? And maybe as the vaccination programs take hold, as we continue to get maybe round 2 a stimulus out of Washington, with a pledge from the Fed and their counterparts around the world to be very gracious, if you will, with monetary stimulus, the table could be set for decent returns on a go-forward basis, with maybe the one caveat and concern and thing that we're monitoring, right? Of course, the valuation challenges exist. We have had some pretty good returns over an extended period of time, a couple of obvious downdrafts not included. So that does present a little bit of a headwind going forward in terms of absolute equity returns, and obviously interest rates are very low, right? So that can be an important guidepost for the returns that we get from fixed income. But nonetheless, the takeaway is that there's been a lot of stability in the markets. There's been a broadening of returns. And as you've seen as recently as today, results in the capital markets have been pretty darn good. And frankly, amazingly so, since what occurred back in March, when we would have been hard pressed to think, given the circumstances, that we would now be seeing and posting positive returns in many markets around the world on a calendar year to date basis. So that is encouraging. Again, in the interest of time, I'm going to skip ahead here if no one objects and get you right into the plans. So you've got those perspectives. We'll start with the pension plans. The one 30-second catch up for the group that we probably think is important, our governance calendar that we follow with the subcommittees, where we're kind of stepping out and looking at other elements of responsibilities as fiduciaries that group has over and above the investment markets and results and portfolios. This quarter pertains to just a quick catch up on the actuarial front. And what we have done here on page 16, and you'll see there's an awful lot of numbers there, so we'll distill it momentarily, but we're highlighting funded status across the state. And you see there in the upper left-hand corner of the page that the bulk of plans are funded in the 70 to 90% range. As you all know, right, the 3 pension plans, Board of Ed's about 75% funded off the latest valuation. The town plan, similarly, police plan is funded up around 82%. The statewide average in our survey was just about 75%. So the plans sit kind of right on top of, from a funded status perspective, what we're seeing statewide. The other big thing that's been dealt with, and I know you've all heard this and lived this, and Becky talks about this all the time, has been kind of the evolution in terms of expected rates of return, right? And you see in the upper right-hand corner how those return targets have diminished through time. And we now have the largest cohort being an expected return from assets somewhere in the 6.75%, call it 7.25% range. Those yellow charts over in the far right in the upper right-hand corner of the page. So a statewide average of just about 6.75% in terms of expected return, which dovetails, as you all know, with what's in place, at least as the latest val for the town plans. So really, there's nothing here actionable that we had talked to the subcommittee about. It's really information just for the for you folks as well. The plans look and feel for what it is worth, a lot like what we're seeing statewide, both in terms of funded status and discount rate.
One quick question. You had mentioned at the subcommittee that you thought rates were more likely to return at 6.2. Did I hear that right at the subcommittee? Do you have thoughts as to where the right rate is?
Yeah, so I would tell you, Lisa, I don't think we land at 6 3/4, right? I do think that number over time likely is pressured lower. So we had mentioned at the subcommittee, what we'll do as part of that exercise to validate that thinking is in our next cycle of reporting, we will be delivering to the subcommittee the formal asset allocation work with our latest capital market inputs, and that'll inform how we think about where that discount rate may ultimately need to reside. We say 6 3/4 today. I think those are as of 2019 fiscal years. I think the pressure statewide, as everyone knows, continues to be lower. And I think that number is unfortunately probably trudging towards 6.5% and maybe even a touch lower than that when all is said and done. So I think you're right. I think we'll see lower discount rate promulgations from folks like us on the asset side of the ledger, and I suspect from the actuaries as well. I mentioned earlier, right, the hurdle on a go-forward basis, while constructive, I think all things considered, we do have the challenges of those higher valuations, and that may mean the absolute returns we see for the next 10 years, might be a touch lower than those that we've just experienced. So yes, Lisa, the short answer is I think you might see. We'll test and prove that for you, but I suspect that's what's going to come out of that exercise.
Okay, thank you.
And then the final just takeaway here, and again, a lot of numbers and a lot of charts. I would point your attention, if you can make it out there, the first bullet on the bottom half of the page, you'll see reference to statewide investment returns for the fiscal year 19, the 3 and 5 year trailing years as of June 2019 as well. You see 5, 7, 7, 9, and 5.2% respectively. Pretty amazingly, if you look at the Simsbury plans as a collective, the three plans, their fiscal year 2019 number was 5.6%. The annualized 3-year number was 8% versus the 7.9%. And the trailing 5-year number was actually right on top of that statewide average of 5.2%. So really those three data points, right, all kind of layering right on top of what we've seen statewide. And again, nothing actionable, more information for the board. And that's, we've just cataloged here that detail. And again, the subcommittee had seen that information, of course. The portfolios, the message we relayed to the subcommittee a few weeks back, the portfolios from an allocation perspective, we think are in pretty good working order. You see the individual plans here and the target weights over in the far right-hand column. A little bit of fluctuation by virtue of what's going on in markets, but nothing that persisting or meaningful in terms of necessitating action. We did, as an aside, raise monies with Amy in all three of the plans towards the end of November. And as you can suspect, just given the relationships you see on the page here, we were sourcing from equities, global equities, given their slight overweight stances in certain circumstances in each of the three plans. So I think we're in good working order from an allocation perspective. We do have the entirety of the roster you see in the left here from a research standpoint on maintain, kind of our highest designation, as you know, kind of our affirmation that the managers are doing as advertised and expected. So I think we're in pretty good working order. And then from a performance standpoint, you do see there for the quarter, the plans are up. I'm in the middle of the page to the far left there in the trailing box, 2/3 of the way down the page. You see 5.7% for the plans in the third quarter, a calendar year to date number of 3.3, the 1 year number of 9.1%. Versus 8.7 for the benchmark. October was a little bit of a down month for markets. The portfolios did protect on a relative basis to the tune of about 0.5% in each of the plans. Have not seen the November numbers just yet, but November was a splendid month in the market. So I think when we get those numbers, we'll certainly share those with Amy, and she can, by extension, share them with you. But I think through November, the plans are having a by and large, pretty solid year on the performance front. And as you know, December has generally been pretty encouraging as well. So we'll see how these next 2 weeks or so go. But I think we're in pretty good working order on the performance front. And you see, I'm not going to go through these, of course, tonight, but you do have the due diligence notes there if you're inclined to read those and have a sense of what's going on the manager levels. We talked about some of the managers at the subcommittee meeting, but again, think we're in good working order. I'm going to quickly do OPEB, and then I promise I'll pause and see if you've got other questions. I do want to be sensitive to time, and I know you've got a busy agenda, and Tyler has a couple of things that he wants to provide in the way of updates as well. OPEB, switching gears, the representation of the portfolio up on the screen as of the end of September. So just about $19 million you see there in the OPEB trust. Again, largely, if not precisely aligned with targets across the different asset classes. And just as a reminder for the Board of Finance, this is probably old hat now, of course, but using those ETFs, those index ETFs as the expression of the allocation here. So this portfolio through time, right, will generally provide a return that aligns with targets, and there'll be a little fluctuation with some tracking error in quarter to quarter, but over the long haul, as you see here for the program, it generally, as designed, right, runs right in line with the broad markets on a net of fee basis anyway. So 5.3% for the quarter, and you can see the plan was up about 8.2% for the 1 year period ending in September. So decent returns, I think, on this front as well. We'll do that same lift in terms of the allocation exercise for the OPEB trust when we roll those out in our next round of production. But otherwise, I think we're in good working order. So with that, let me pause for a minute. I again apologize. That's a lot of information, but I know we wanted to just hit the highlights, and happy to entertain questions or thoughts from the board. Sounds like people are okay.
Yeah.
All right, great. Well, thank you for the questions, and I will, Tyler, do you want me to roll these for you, or how do you want to do it?
Yeah, why don't we just start on page 73. Again, given that we're currently in the transition stage from Mass Mutual into ICMA, I don't have obviously any updated recommendations or changes. Just to give the board an idea of what's going on from a timeline standpoint, and a reminder. Obviously through a large search, we're moving the defined contribution assets from Mass Mutual, which since then has been bought by another company, will be becoming Empower. We through that search decided on ICMA as the final record keeper. So it gave us an opportunity to obviously lower fees as well as update the fund menu. To give you an idea of where we are now, the mailings and education meetings were done late November. There will be a blackout period the 4th of January, and the assets should be mapping or transitioning from Mass Mutual to ICMA as of January 12th. So we're on track as of now. Again, the menu, as you see on page 73, is slightly different than what we obviously we maintain the funds that we felt had merit, but reduced some of the funds that we thought that were either underutilized or not typically used in fund menus. We also added 6 index funds in addition to what you previously had. So not only are we maintaining the sort of S&P 500 index as well as a sort of extended market index and a fixed income index as well as a international index, but a Fidelity large value, small value, mid value, Fidelity, large growth, mid growth, and small growth index. So we're doubling in the number of index funds offered to the plan employees. Again, the core lineup that will be mapped are reflective here on page 73 and into page 74. Some similar managers that we've used in the past, obviously also in some of the managers we use in the pension as well. And then on 75 is the target date funds. We were able to get the lowest share classes of those target date funds, as well as the 5 year investment options. Previously, it was just the 10s, and so we've also doubled the number of target date funds that are offered to employees. The only other thing I'll note, I guess, Chris, if you want to go to page 78, the board can get an idea of what the balances are, and so pretty good recovery back up from March, similar to what we saw in the pension plan. So back up to close to around 13 million in the 457, and then the 401A is on page 79. Again, some decent recovery there. And then the Board of Ed plan on page 80, also with some good recovery over the last month that I believe will continue into this current quarter. The only other thing we did, just so we also did this previously during the search, but we did a questionnaire on the town's behalf with respect to cybersecurity. We wanted to make sure that both ICMA and I obviously using MassMutual now, but moving to ICMA. But ICMA is up to times with respect to data protection, data security. This is on page 96, Chris, and we outlined the summary there. Again, given that this is participant assets, these pools of assets are clearly targets for hackers or fraudsters. We want to just ask the right questions around cybersecurity insurance. How is one protected? Are they guaranteed if there was fraud? Is there multi-factor authentication? Things like that. So we outlined that here. If you have the time, feel free to look through it. Again, we compared this with other record keepers, and there was no issues or reasons for concern with ICMA's level of data security, data protection. I'll pause there to open it up for any questions.
I just have one comment. First of all, thank you. Really appreciate the work you're doing in the summary. At the subcommittee, Kevin chairs that and does a great job, and want to commend him for his efforts there. But the subcommittee, we did ask that the town report to us on those same questions, just so that we could benchmark the town against the same questions that you asked. And Amy indicated we can anticipate answers when we have our cybersecurity agenda item in February.
Great.
I don't think, Mr. Chairman, we had anything else for the board tonight, absent any other questions.
Well, we appreciate you doing this again for the full board. We do get reports from Kevin and Derek and others who do attend, but we really appreciate having direct access to you guys. And so it's good to have you on. Thank you.
Okay, well, we'll be on our way, I suppose, and wish
Please do.
holiday season and be well.
All right. Thanks, guys.
Be well.
Have a good holiday.
Have a great holiday, everyone. Good to see you.
Happy holidays.
Okay. Next item is the approval of the minutes from the November 30th tri-board meeting. Anybody have any comments or suggested edits? I'd be looking for a motion to adopt these minutes.
I'll do that.
A second?
Second.
All in favor, say aye.
Aye.
All right, approved. Good. Next, Amy, supplemental appropriations.
Yeah, so two appropriations for your review tonight. One relates to road paving. Aquarian did some road paving work that coordinated with the town. So the town did the work, and Aquarian basically reimbursed the town for their work. So we have an allotment of money for paving during the year. And right now we're not over budget. We were able to cover those expenditures within the current budget, but going into the spring when they ramp up to start their season, we are going to need this additional money that Aquarian provided us. So we just need the formal appropriation there. And then under the bike and the crossing for the grant, this is a grant that was dated back to 2018. We did receive the grant award. We just hadn't started the work, and we would like to start the work in this budget season instead of waiting to next budget season. So in order to do that, we do need your formal approval for the appropriation.
Okay, any questions or comments?
I have just one question.
Yeah.
And I'm certainly in favor of these and we'll vote yes. I just note that 600,000 is about half our paving budget. Amy, how does that work? Did we have extra staff? Did we have to use overtime? I mean, I just wasn't understanding the number.
I can follow up with Tom on that. I don't know if maybe they did their paving work for Aquarian during the beginning and they're doing theirs in the spring. I don't really know how the personnel and the actual mechanics of it work, but I can follow up with Tom Rye on that for you and shoot you an email.
Yeah, I was just wondering about capacity, but certainly glad that we're leveraging that money and whether some of it's going as more as revenue. And also the other question I had is, does it make sense to do this appropriation from the capital reserves in case they don't finish it so it can carry over into the following year? Or do you want it from the general?
It's in the capital fund now, so
okay. That's fine.
Yeah.
Okay. So I would need a motion to move effective December 15th, 2020 to approve the supplemental appropriations request as presented.
So moved.
Moved by Derek, seconded by Lisa. All in favor, say aye. Aye.
Aye.
Approved unanimously. All right. All right. Next up is 2021 agenda planning. So we set the dates last time, but one of the things we did, again, I give Lisa a lot of credit. We look at all of the people we need to have come visit us and the topics we want to cover throughout the year in an attempt to keep these meetings under 4.5 hours. We try to spread them out. They do a pretty good job of that. So this is the schedule. We don't really need to approve this. We just want to make sure everybody's aware of it. If you look at it and see something that you think is missing or something you'd like to do more often or at a different time, please let us know and we can make some arrangements. But it's good to have these things on the calendar so that we can get especially the third parties that come and present to us. And we can make sure we get our other business done smartly. All right, any questions about that?
Did you want to use this time to talk about the debt modeling agenda item in January or do that?
Yes, I would. I was exactly where I was going to go. And in fact, I was going to hand it off to you and say, what things do we want to, this is a big meeting now we have planned. We've talked for a long time about trying to get everybody on board with capital planning and long-term debt planning. And we're working on some modeling to do that longer term. I would ask that we get all the resources we can in preparation of the meeting. Lisa mentioned to me today a report, I guess, that the state has done on municipal borrowings and best practices and guidelines. And so we should all share that with all of us so we can be as well informed. This is a really difficult topic because when you borrow money or build something big, it's a big chunk. And we've got, a lot of things that we want to do, especially at the Board of Ed long term. And each one of these is a backbreaker. And so we need to go out and look longer term at how we're going to do this and what's allowable and what are the relative levels of both absolute debt we can have, as well as the debt service associated with that and the tax impact from all of that. So we're going to be doing that modeling in preparation of the January meeting, and would appreciate as much input as we can get from you as you think about it, and we'll try to share as much as we can before the meeting so we can have a very wholesome and productive conversation. Did you want to add to that, Lisa? Or
Yeah, just that's a good summary. I think what we're trying to get at is there are two things. One, affordability for the taxpayer, but also as you take on more debt, it can impact your ratings with the bond rating like S&P and Moody's. And they actually have analytics on that. And the last one I looked at was S&P, and they use sort of the 8% debt service as one level, and then total debt 60% of total operating. So there are different standards there. And we did ask Amy. Amy, I don't know if you've had a chance to reach out to our bond advisor, but often they'll provide those statistics. They could let us know what S&P looks at. I have something, I'm not sure it's the most up to date. I'm sure our bond advisor has the most up to date statistics. But to try and sort of understand, if we go above 7%, what's the impact to the taxpayer? And then what's that going to do to our ratings with S&P and Moody's? But Amy, any luck with the bond advisor? Our old bond advisor used to do a summary report on debt.
Yep, he actually did send me something over. It just didn't make it for the packet, but I can forward that along if you want, or I can save it for the next packet, whatever you guys prefer.
You could forward it.
yeah, send it on.
And Amy, do you think it'll be possible for him to be at the January meeting in case we have questions about structured debt and the impact?
In the doodle poll, yeah, that's a good idea.
Okay, thank you.
All right. So that will be a very important meeting, as they all are, of course. October 2020 Building Department report. Continuing to be strong. It's good. Here comes the snow. Maybe that'll slow things down. All right. Anything else for the good of the order?
Rob, just one question.
Yeah.
Where on Meadowood, we had talked about getting an independent appraisal. Do we have any updates there? I mean, I'm just researching some of other states. A lot of states require for a substantial land purchase 2 independent appraisals. So I just wanted to see where we are with that.
Yeah, so that's a good question. I appreciate the follow-up, and I need to follow up. We had a call, 2 or 3 weeks ago, where the talking to Bob DiCrescenzo and Maria, and with the status of getting our own independent appraisal. There is the appraisal that Trust for Public Lands did is now available, and I think that we need to make arrangements to share it with our board in executive session. But the work that we had asked to be done, which is to have an independent appraisal or a confirming appraisal or whatever that shows the value of the property in its to be used state rather than its permitted state, is still unresolved. And so the appraiser that did the original appraisal sees a conflict in doing reappraising the property for our board. So we need to resolve that. And Bob was going to do some research on other appraisers, and I haven't heard back from, as I said, a couple of weeks ago, whenever that was. So let me circle back with Maria and report to the group where we are on that. As far as I know, they still intend, the Board of Selectmen still has that on its agenda and is thinking of where its priority will sit relative to the other capital projects that they have.
So Rob, thank you for that. I just, I know Maria had mentioned that it may take some time. And to me, having an independent appraisal is going to be important. I know I'm just one vote, but that's going to be weigh heavily in as an important factor for me.
I think we've sent that fairly consistent message, and that was what they were responding to when they're now prepared to share that with the existing appraisal with us. But also the effort originally was thought that we could use the same appraiser. Now that's not going to happen, so we need an alternative plan. We haven't given up on that plan, We might if we think that the cost of it is prohibitive, but we're not there yet. We don't know what it is, and we know we need it. Feel like we need it. So, all right, more to come.
Thank you.
Just one question, Rob. So retirement subcommittee, we worked on the RFP last year. Are there items that you would like the subcommittee to review on behalf of the Board of Finance? So that's an item that you can think about and get back.
Yeah. So Chris gave a hint at it today, but I think some sort of recommendation about the assumed investment rate from the pension subcommittee would be more than appropriate. Would be, it's our decision, but I think that's the kind of thing with the professionals we have and the fact that they are consultants to many municipalities, both in our state and around the country, would be helpful. All right. Well, I told Kevin before you guys got on, I wanted to set a land speed record tonight, and I think we might be able to do it because the only thing I got left is the adjournment motion.
So moved.
And
Second?
then Happy New Year, everyone.
Yes. Happy Hanukkah, happy Merry Christmas, Happy New Year. Does it seem like we just do this every other week? How many weeks do we have till we get to do this again? Linda's smiling.
Like 4.
All right. Can't wait till the new year. All right. Have a great holiday, everybody.
Okay.
Thank
yes.
you.
Everyone.